Glidex Forex Academy. This is a weekly analysis, and we'll be looking into Eurocad this week, and other video on synthetic indices would also come in after this. So here we go. All right, so this is a chart on Eurocad, and you can actually check us out on TradingView at Glidex Forex Academy on TradingView, and there I'll be posting my trading suggestion, the chart and the picture, and the video is on YouTube. Okay, so what have I done here? Now look at this. I want to explain what I have actually done here and what I've delineated on this chart. Now look at this. Look at this double bottom here, which a retail trader would consider as a support, and see how price reacted here once, it reacted here again, and ordinarily as a retail trader you would have bought at this point. Okay, seeing that it has reacted 2 times, and you would have bought at this point, hoping that you will take your profit on this high or this high. Now the market gave you a little profit, or the market will give you a little profit and come back to take out your stop loss. All right, which a lot of people might call the market manipulation or something. All right, so this is all traded by an algorithm, and this is how it has always been. Now, so we have a lot of stop losses on this area. I delineated it with a dollar sign, as you can see. So we have a lot of money on this area, and the banks are interested in these stop losses for them to run their order to the upside. So what you have here is a bunch of retailer stop loss, and you find price come dig deep into this place and take out. And note, this is a daily time frame, so yeah, you'll be looking at quite a significant amount of pip, right? You'll be looking at a significant amount of pip. Say this is 53.82, this is 53.10, so you'll be looking at about 70 pips, 72 pips. You'll be looking at 72 pips, which is, I don't know if your stop loss can be higher than that, actually. So you find institution deep into this stop losses that are placed by retail traders, and you find a move to the upside. This is what you get when you are stopped out and then price start going to your direction, like, oh, I predicted it rightly. Yeah, you did predict it rightly, but you were played. So I'm explaining this chart from an institutional perspective. That is, my strategy is an institutional order flow, so I trade with the banks. All right, like how they trade. Actually, I don't mean I sit down in the bank and trade. All right, so now look at this. Look at price rally up. Look at price rally up to take this high. All right, look at it rally up to take this high with this candlestick, and then it came back into this last bearish candle, okay. All right, sorry, into this last bearish candle, okay. And then look at it, look at this week entry. All right, it came into this last bearish candle. Now this is an imbalance created. All right, let me zoom so you can. Now this candlestick is an institutional candle, okay. After this has taken a liquidity, all right, now you see this last bearish candle. All right, now these two candles, they are actually inside this last bearish candle, okay. So price created an imbalance, that is, there was no sell side between here and this candlestick. Okay, all right, so that's between, okay, let me just do this. Okay, yeah, good. So between here and here, all right, inside this box is an imbalance, that there was no, between this last bearish candle and then this candlestick that you can see they are weak here, right here. So price created an imbalance. There was no or you call it a fair value gauge, all right, FVG. There was no sell side into this, so it was just bullish all through. It was just bullish all through this day, and then market closed above. Market closed on this high actually, and then the next day we have it break this high. Now, so market came into this bearish candlestick, into this last bearish candle, all right, to fill this imbalance. Imbalance are abnormalities in the marketplace, and we believe that the price is going to rally down to fill it at one point or the other. So price came this order block, all right, this is a bullish order block now, into this bullish order block. And what did you see? There was a rejection in price, and it came back to retest it, all right, then it created another bullish order block, all right. This last candlestick before this push, now look at it, 1 2 3 4, it was all bullish, all right. This is large institutions for you. This is huge sum of money into the market, causing a bullish move into the market. This is not a retail trader trading, all right. This is banks putting liquidity, yeah, creating liquidity in the marketplace. They pushed price all the way into this high. They broke this high, all right. Now, after breaking this high, and this high, this is September 2020, and this high, all right, after breaking this high, they came back, or you can see they are coming back into this order block, into this bullish order block, all right. The same thing that they did here, same thing that they did here. And when price moved from here, what did it do? It actually cleared this high. Okay, so now my prediction is that price is going to come into this order block, all right, either the open or into the 50%. Sorry, I'm just going to move this into the open, okay, or the 50%, into the open or the 50%, all right. And then price should rally up to the upside to clear this high. That will be our first profit target, and our second profit target will be to see price clear this high, all right. This July, this high was created July 2020. Our second profit target will be to see price clear this high, all right. So but we want to have our first profit target here, or I want to see price clear this high, and this is going to be a risk to reward of 1:4.3. Okay, so we'll be risking just $1. All right, we'll be risking $1 for $4. All right. So, and our second profit target will be into this place, which is about 1:7.6. This is actually quite good for me. Now I'm talking about this 1:4. All right, as you can see, risk to reward 1:4.38 into and also 1.7.69. all right, so 1:4 is really good. It's really good. It's really good. So you can, and your stop loss, our stop loss will be below this institutional candle, all right, below this bearish candle. So we are risking just a little for this much. So now this is a daily time frame. You can go ahead and let me show you something on a more smaller time frame, because I believe we would have traders with who will not be able to, who would not want to take that much risk. All right, now you can look at this bearish candle on the 4-hour time frame. Look at this bearish candle that took out this low. All right, so I'm just going to delineate it. All right, so look at this low taken out by this candle. All right, so you can actually, and it's into the 50%. All right, it's just into the 50% of our order block. So your order can start here. You can place your order here. You can place a buy limit here, and that will be your buy limit should be 1.546, and then your stop loss should just be below this order block 5419, and then your profit target will still be the same. And we can go as far as into the 1 minute time frame to actually pick our order, but that would be when the trade is going on. There are a lot of things we would want to see, and then we would have a very insane risk to reward, say 1:200, 1:500 into the 1 minute time frame. So we'll just be risking a very little, like little in the 1 minute time frame. So there are a lot of things we would want to see which most of my students know that already now. So if they are seeing this video, they know what I'm talking about. They want to see that play out. They want to see that pattern play out in the 1 minute time frame for them to really risk so little for a very huge amount. Now in that 1 minute time frame, everything is going to play out inside this other block. Everything is going to play out inside this other block. So another thing I saw here was that this low has been taken out already. This low, which would be which should be the support, which should be a support to retail traders. You look at this low and right here, and you feel price is gonna go up, it's gonna come and it's gonna react here, and then it's gonna go up, and then they give you, and then you're looking at this candlestick here, this doji. Yeah, wow, that's another confirmation. Doji candlestick, indecision. Yes, we're gonna buy, but all the same, you were stopped out here. And meanwhile, I believe that we should get some bullish response inside this other block. Now, this trade might not go my prediction, which is completely okay with me, because losing is part of the game. It's completely okay with me. So if it does, I will just be stopped out with a little loss. All right, with a little loss. So that means my analysis is wrong, which is completely okay with me actually. So that is what we have on Eurocad, and thank you for tuning in. Don't forget to subscribe, and you can also check us out on TradingView. Check me out on TradingView. I'll be dropping the pictures there, and you can also follow the outcome of the chat. All right, so thank you very much for watching. Don't forget to subscribe and drop a comment and let me know what you think on this particular pair, or if you want us to look into another pair, you can also drop a suggestion. All right, thank you very much. See you in the next video.